and welcome to the Ultimate Bull Run. Today, we are doing something different just for you. After we shared our video on the journey of Dr. Giovanni Santostasi and the Bitcoin Power Law, many of you, the Ultimate Bulls, reached out to me personally asking for a guide on how to use the Power Law to either stack more Bitcoin or make some serious gains. We heard you, and I'm thrilled to have Dr. Giovanni Santostasi back with us. Today, he's here to show us how to use the key indicators around the power law to get a crucial edge in the market. But before we get started, I want to talk directly to those of you who might be skeptical. I get it, there's a lot of noise out there, but let me tell you something from the heart. I've been in the crypto game since 2017, and when I look back, I can't help but wish I had sold some of my Bitcoin when it hit $5,000 or $20,000 or $60,000. But before you judge me, let me be clear, my goal is not to cash out and forget about it. My goal is to buy back even more Bitcoin when the price is down and I have more money. If you're like me, this video is for you, and we understand no model is perfect, whether it is a Bitcoin Power Law or S2F, anything. But if there is something that gives me even 70% edge, you bet I'm going to seize it with everything I've got. And with this context, I want to just give the moment for Giovanni Santostasi to talk about the Bitcoin Power Law, a quick dive, a summary of what it is and why it makes sense. And we can talk, we can see how we can use the indicators, especially on the trading view and the chart.
Absolutely. So thank you for this opportunity. So let me explain, first of all, the things that you say that are very good. You made a very good summary. The entire idea of this particular approach, because we get a lot of pushback online, there are a lot of people that I think they settle on this idea of oddly, right? We are different individuals, we have different styles, we have different ways of addressing life. And in theory, the idea of keeping your Bitcoin and hodling for a long, long time, it's a good thing. The place where I am a little bit, resistant, and in fact, I don't like it at all, and I think it's the wrong attitude, is when people make dogmas, when they arrive to this conclusion, and then it's not something that works for them. They don't say, hey, hodling works for me. They impose it on other people. It's like they start to judge other people. They start to think that, there are different classes of Bitcoiners. You are not such a good Bitcoiner because you want to play with your Bitcoins, right? While I'm better than you because I'm hodling. That attitude, I think, is wrong, because anything that it becomes a dogma and anything that you want to impose on other people is not right. Now, the other extreme will be when somebody say, hey, Bitcoin is just an investment like anything else. You should play with it, sell all your Bitcoin, do trade with it on a daily basis, on intraday basis. That is the other extreme. We are not in that extreme. So I don't see why people want to attack me in any possible way, because we are not advocating that. If anybody listen, including this talk, to what I say, I always talk about being aware of what you're doing, do things in a moderation, having a plan, taking just only a portion of your Bitcoin to do these things that we talk about, like maybe taking some profit when it's the right time. We always invoke awareness, doing things in moderation, being careful. So I don't see what there is to attack here. Just somebody that is a fanatic and it's a dogmatic person will want to do that, right? So we are not. And also, I have enough respect of people that invest in Bitcoin or buy Bitcoin or want, maybe investing is not the right word, like they want to change your life around Bitcoin, whatever terminology you want to use, it is investing. Like maybe investing is not the right word because we emphasize the importance of Bitcoin and how it changes our life. But it's in the end is that you are taking some money that you earn from your activities, your work, etc., and you're buying Bitcoin. Okay, but so the idea is that if you do this with awareness and you're doing with preparation, you study, you learn, you are becoming a agent, a free agent. Okay, so no me or any other influencer is going to make you do anything. I have enough respect of you as a Bitcoiner to think that you are an agent, that you are somebody that can do his own decision. So anybody that say, "Hey Giovanni, you're enforcing people, you are pushing," it's ridiculous. It's you that you have a very low understanding of who Bitcoiners are, and you're thinking that they are so easily influenced. They are not. If somebody is making something stupid, it's probably because they were going to make something stupid anyway. It's not based on me, it's based on them. But I believe that the majority of the people that are involved in Bitcoin are intelligent people. They can make their own decisions and they can decide what to do. So I wanted to make this very clear from the beginning. But, risk management, right? So look, let's reason in a scientific way, right? Because it's the only way that I'm doing this and what differentiates me from anybody else. Yeah. Now, imagine we had 100% knowledge, right? We don't have it, but we can assume that, right? We can make some conclusion based on that. Imagine we did know that Bitcoin reaches, let's say, next cycle, reaches 200,000, and then it's going to crash to 65. Knowing that this happens 100%, what will be the most logical thing to do?
That's exactly what I've been preaching. Of course, tell it. Even if you sell at 180.
Even the most fanatical person will agree that the most logical thing will be to sell at the top and buy at the bottom. Now, somebody can say, well, I need to be there. Well, we're not talking about one precise day. You can still sell a few days before we reach the top. You can buy several times when we reach the bottom. It's not something that you need to do at a precise second, at a precise minute. It's something that you have enough time to take your decision. So whatever excuse somebody will make up, it's illogical. So the only logical thing will be to sell at the top and then rebuy at the bottom, right? Now, somebody can say, well, I don't have enough discipline to keep all that money around for 1 year, Well, again, that is your limitation. You're talking about hodling for years and years and years. You don't have discipline to keep some USDT and buy 1 year later. So anything that somebody can say, you can answer in a logical fashion. The only question mark is this. We don't have certainty that is going to go down from a particular point, right? But it's not that we don't have any information at all. Again, the way to reason about this, it's in terms of gradation, right? It's never 100% one extreme or the other extreme. It's somewhere in between. It's not that we don't have any information. Why? Because if you study Bitcoin and you look at the power law and you learn about the cycle, you see there are very precise patterns. The three bubbles that we had so far are almost, and I will show you when we look at the indicator, they are almost like clockwork. They are clockwork. We had very precise tops at very precise time. It takes a very precise time to go from the bottom to the top. Again, almost in a clockwise fashion. Now, we had three of these events, the three bubbles so far. The question is, are we going to have a fourth one that is going to behave in the same way? Well, we don't know. That is where the big question mark comes. But it's reasonable to think, well, if we had it three times, maybe there are reasons. Maybe there are something outside or even internal to Bitcoin, how it works, maybe something to do with global liquidity cycles, many different factors where these bubbles tend to happen at regular fashion. Is that a reasonable way of discussing this topic? Yes, it is. Okay, it's what a scientist will do. We have many situations like this where we see planets, around other stars. You see one orbit, two orbit, because it takes a long time for these orbits to happen, maybe years, and after a few orbits, you say, okay, I think I'm going to see a fourth one, based on even on few observations that you have done. Um, this happens all the time in science where you have only few data points, and then if the patterns are consistent, and within each pattern there is a lot of consistency in terms of how high the peaks are. We even found recently that the top of these peaks, they go down in a very precise mathematical fashion. It's an exponential. It's one of the few exponential that we have in Bitcoin, because we have some time power law and other times we have an exponential. With the case, they go down in an exponential fashion. Now, that is weird, because why should we do that? It's actually something that the bubbles have to do with FOMO, have to do with irrational behavior. You will not expect them to decay in a very mathematical, precise fashion. They do. And Bitcoin is full of things like this, how it grows in time, how the bubbles decay, when they happen. It's one of the most predictable systems that we ever seen in finance. It's almost like a miracle. Okay. So the question is, how much can we trust? Now, if you are in between, can we trust it 50%? Can we trust that we are going down once there are certain deviations, they happen at a certain time, the patterns is repeated from the previous cycle? And you see the beauty, as it happens, you can check. The power law also gives you a reference, right? You have this reference, you can see how big the deviations are, and then you can say, hey, look, this thing looks like very big deviation from the general trend. Maybe is a place where I should take some profit, right? The only thing that can go wrong is that the price continues to go up. But imagine you're taking only 20% profits, or 30%, or even 50. You still have enough Bitcoin where if it goes even more up, then you can sell a little bit more Bitcoins when it goes even more up, right? You can do what is called portfolio rebalancing. That is something that is a lot of people may have invested for a long time. It's something that they do all the time. You have two things and you try to keep 50% of one and 50% of the other. So you could continue to do this rebalancing as we go through 300,000, 400,000, 500,000. I mean, I don't have any problem with going to 500,000. I would love it, even if it is not what I'm predicting. I would not mind to be wrong in my prediction, because it's not another thing that I want to emphasize. The model, the Bitcoin prediction model, theory, whatever you want to call it, has different components. The main component is this general path that is the most proven, the strongest component of a theory. And that has nothing to do with the bubbles, because the bubble in theory, they cancel each other. They go up, we reach a peak, and then we go back to the trend. So it's almost like if a bubble didn't exist. So in theory, the power law model says almost nothing about the bubble. Say they don't exist. Now, they do exist, and you can go to the next level and say, okay, I acknowledge them. They do exist. So how they behave in comparison with the general trend. And so one of the things that we found, that it turns out something actually, because almost every few weeks I add some new pieces of information. People think that it's just a straight line. We have done so much work, I can write an entire book about all this work. Now, one of the recent development is that we were able even to model the behavior during the bubbles. So it turns out it's not a power law. It turns out that it looks like an exponential when we go up. Now, the going up is a little bit less precise in terms of a model, like you can use like an exponential curve. Going down is almost perfect. It really, really looks like a decaying exponential, and you can fit it. I can show you some graphs about that. You can fit it with a precise curve. It has a very precise decay over the three different bubbles, very consistent. Going up, it looks like the first bubble we went very fast up, much faster than the other two bubbles. And you can calculate the rate. You can calculate the exact rate at which we went up. Okay, it was about 1.6% a day, the first bubble. But it's insane, because you can calculate how much money you make if you have about 1.6% over an entire year. It turns out something on the order of 300 times, something like that. And then the second bubble, the returns were a little bit smaller. They were 1.1% a day. The last bubble was about 0.46% a day. And so the predictive one, the next one, if everything continues to behave in the same way, that seems very regular, is going to be 0. Sorry, I'm recovering from COVID. It's 0.33% a day. So that is what we're expecting for the next bubble. One of the beautiful things about doing these things mathematically, differently from what other people do, is that even if you make a prediction like this, right? I'm saying my prediction is that during the bubble, that is supposed to last about 1 year, we will go up by 0.3% a day, every day. Well, we can monitor that. We can actually calculate. We can calculate the return. I have an indicator for that tell us on an average over, let's say, last 30 days, what are being the returns? Are we going higher than that? Are we going lower than that? And we can make predictions based on this trend, because in the past, how we went up and down was also very predictable, and it followed a very precise mathematical path.
Yeah.
So this is our approach, where we can monitor everything, we can compare moment by moment, you can make some decisions, based on these predictions, and then, you can take an approach where it's all about risk management. So I think, for example, according to your level of risk, selling 10% of your coin is almost a no-brainer. Today we calculated just for fun. Imagine we continue at the same rate that we went up during the first bubble. Do you know how much money, how much Bitcoin will be worth it today? Something like 1 followed by 30 zeros or something like that. Okay,
wow.
That is more stars that there are in the entire universe. Okay, so Bitcoins will have more zero than than all the stars in the universe. If we continue to go at that pace when we had the first bubble. Okay, so and even like, for example, if we imagine the last bubble that we had never stopped, right? That we continue to go up in that fashion. Right now, we will have a Bitcoin that will be worth $7 million, one single Bitcoin. So people don't realize, they say, oh, exponential, but they don't realize how unsustainable these bubbles are. Can you imagine $7 million Bitcoin? Where that money comes from? You will need 100 times more ETFs that we have right now. We will need that kind of inflow of money to sustain a Bitcoin that is worth that much. So it's ridiculous. What are you thinking? What do you think that is going to happen after 1 year of this sustained growth at this level? Like, just to give you an example, even my prediction of 0.33% per day during the next bubble, that is about 3 times the returns that we have right now from the support line due to the power law. So right now, the power law says we should do something about 0.1% per day. And this number is going down over time. It's going down slowly, but it's going down. So the next bull run we're going up 3 times faster. That is another way of thinking about what, well, maybe I should take advantage of that, right? If I have
Exactly.
Bitcoin going 3 times faster, that is going to go in terms of its general growth, maybe I want to take advantage of that. I want to cash in something. Then I'm going to use that money to buy more Bitcoin. You don't like it,
That is
you think it's crazy, then do something else. Then continue to hodl. Nobody's arguing with you. Nobody's telling you're doing a stupid thing. I think it's more intelligent. Can I say this? It's more intelligent if you do it properly, if you do it carefully, if you do it with awareness, if you do it with a plan. It's more intelligent to actually cash in, take some of that cash, and then rebuy when we know that we are at the bottom. Because, by the way, the bottoms have been even more regular, even more precise than getting the tops. And so, if that helps you and you can multiply your
it does.
Bitcoin, then why not? Do it
Exactly.
don't do it in a degen way. Don't take 10 times leverage. Don't sell all your Bitcoin. Do it carefully. Do it carefully and with awareness. And actually, nobody can tell you are a worse Bitcoiners than these other fanatics. And you're trying to understand Bitcoin. You study Bitcoin. You became one with Bitcoin. And then you do certain things that give you results, right? So why not? Why not? What is wrong with that, right? I know Bitcoin is going to do this, it's going to reach this top. It's very unlikely it's going to go higher than this. I'm taking some precautions. I'm not selling everything. Maybe if it goes a little bit higher, I can make even more money because I still have a bunch of Bitcoin. I didn't sell all of them. And when it crashes, everybody's crying because their portfolio is not anymore that huge big amount that they see on the screen. Is going down, is going to have a correction. I'm actually opening some puts, MicroStrategy puts, and I'm making a bunch of money out of that, and when it reaches at the bottom, I have all this cash, all this USDT, and I'm going to buy a bunch of Bitcoin, and now I have 2 times more Bitcoin than I had before.
Exactly.
What is
And
wrong?
that is the thing. That is the thing. No one will regret. At this point, whoever loves the Bitcoin, whatever for it is, for the technology, for the value it holds, whatever the reason you are holding a Bitcoin, and if you love Bitcoin, I don't think anyone will regret having anything less than what they have right now. And this
Absolutely.
opportunity, this power law gives you an opportunity, not 100%. Again, nothing is 100%, man. Come on.
No,
But it gives you an opportunity to increase, right? You
absolutely.
can
So,
you can
when
have a
people
one Bitcoin.
argue, oh, I tried it before and I failed. Of course you failed. You didn't have a map. You didn't have the lights on. You were drive without lights on. So this is an analogy that I often do. It's like you are driving and now you have the lights on. I can see it by myself because even if I started to explore these things since 2013, the entire picture about the cycles, how regular the cycles are, the timing of the cycles, how big the deviations are, the fact that deviations fall down in a precise manner. All these things, they were not there all together. They were pieces of it, because I did call bottoms, I did call tops. We had like 30, 40,000 people in that group. And I made posts in this group. And I told them, we reached the bottom. I did. I have the receipts. I can show you in real time. So it's not that I didn't do this, but the entire full picture, like I have it right now, my awareness of what Bitcoin is doing is completely different than what I had 5 years ago or 10 years ago. And now I really feel I do understand Bitcoin and people can learn because it's not me being the guru. It's there, with the right tools like these indicators that at a certain point we can discuss. You can see the pattern yourself, and you can recognize it and you can be intimate with it, and then it's much better to have all that awareness and all that understanding than ignorance, and then you can see, okay, yes, it's going to do certain things and you can monitor and you can take a steps you don't want to sell, maybe you can use the knowledge for DCA. For example, as we come closer and closer to the top, don't buy simply, right? Save your money, put it aside again, have a little bit discipline, and say, okay, I'm going to postpone buying until the price is better. And you will do much better DCA than if you go and buy at the top. So there is nothing wrong with that. You can also continue to hodl and not sell anything and use the knowledge to avoid buying the top. Okay, you can do much better DCA. You can, once we come close to the bottom and all the indicators say, hey, this looks like the bottom, like exactly like all the other bottoms, then maybe you can sell the chairs in your house and buy more Bitcoin. That is the time when you should sell the chairs, right? You have 2 chairs, you have 1 more chair, like Sailor says. I'm exaggerating, but I'm saying maybe you can plan ahead. You can, sell some of your other investment, or maybe you work hard during the summer or whatever, you get a second job, and when we reach the bottom, you buy more Bitcoin. So all these is for sure much, much better than not knowing anything and just, wink it, saying, okay, I don't know, I'm going to draw some lines that don't mean anything, or just hoping that is going to explode because some crazy world event. But what I'm trying to teach people, that the fact that Bitcoin is predictable, it's a beautiful thing. Okay, maybe it's not the prediction that you wanted. Maybe people would like to go exponential and become $7 million within a few years. So that is absurd. But the fact that we know what it's doing and that it's doing certain things at certain times, we can use that information. This is all what this is about.
It is indeed. And again, people can have their own opinion. People can act on their own opinion. But again, this is not for everyone. If you want to hold more Bitcoin than you have right now, this is an opportunity to either dollar cost average, or however you want. The information is right here. However suits you, however suits your, the risk management, your strategy, you can use this right here. And Dr. Giovanni, if you may, you can share your screen, and we can,
I'll try to do
the power law in action. Can we start with just a regular candlestick chart, and then we can add all this on top of it?
Yes, we can do that. So let me take off this height, and then I can choose a candle. All right. So this is the typical simple Bitcoin, and I can take out this one. This is the typical chart of Bitcoin, right? With our candlesticks. I sometimes like actually to show the Akenashi candles. I like them because they give you kind of a pattern. But this is something that everybody will be familiar with, right? When you look at TradingView, all our indicators are through TradingView. We are working also on an interactive chart that will now use TradingView. But some people don't know how to use TradingView, so they can also work on this more interactive chart. But it's still a work in progress. But the moment that we have that available, maybe we can have another meeting and I can show you that chart. But right now, everything is through TradingView. So these are the normal bars that everybody's familiar with. Then we can put on top of these our indicators. So one of the most used indicators is we call the band indicator, is this one. So I add on top of this. Unfortunately, TradingView has some limitations in terms of the things it can do. For example, it will be nice to see the power law in a log-log graph, right? Because the power law in a log-log graph looks like a straight line. And it's pretty striking to see the power law in that way. Now, I do work with this company called LuxAlgo, and they made a version of the power law through some crazy trick that I don't know how they did with crazy trick. They were able to show in TradingView the straight line, the log chart. But we can look at that. It's a secondary indicator. It's a little bit of a trade-off, so it does the straight line, but it has some limitations. But it's okay, because even if we use the linear time on the x-axis, we can use the log on the y-axis, right? Here I can choose log or not log. And all the calculations that we do then in the background are based on the power law, like if we were dealing with the log-log graph. And so this white line that you're seeing here, it's the power law. But you see, because we're dealing with a log linear chart, so we don't have a log on the x-axis, it looks bad, right? But if I could be able to use a log on the x-axis, it will look straight. But it is the power law. All the math that we're using is the power law math. And it's basically the white line. The white line is what we call the trend, the general trend. Okay. Now, I added two more lines. I added one line here, the lower line here, the white line, that represents what we call the support. Now, usually that line, so if you go under the little bolt, you can change its custom. You can customize it. Usually, that line, it's about, I wrote here 0.45, but that's more like 0.4. So it's basically 40% of a trend. Okay, so you can change it a little bit. You can change the upper band. But you see, notice what happened if I write 0.4. I got almost perfectly this bottom. So this line, that is about 60% deviation or 40% of the value of a trend, that is a white line. It gives me almost perfectly. You see how it grabs the bottom here? It's really able to determine the bottom. So we call this the support line. And you see, even during COVID, this was COVID, we didn't go below that. It's almost like a line where Bitcoin seems not ever want to cross. We think has to do with, we are studying these, we are trying to come up with some line of evidence, but it's probably due to the cost of producing Bitcoin. If you go below that, then the miners are losing money, so the system somehow protects itself from that to happen. And so we never cross that line. And you can see here again, we reached this bottom, and maybe we had some weeks, or maybe for a day we broke, but this usually the general trend is that this is like a very strong support line. And so here, see. Now, on top of this general trend of a power law and two bands. Now, why I wrote this band? It's just something similar to these, kind of similar distance. Again, it's customizable. It's mostly like a reference. Basically, once you go above that line, probably we are very close to a top. But we have many other indicators to almost pinpoint where the top is going to be, and again show you. So this blue curve is what we call the full model. So the full model attempts to do different things. It attempts to, first of all, show the cyclic nature of these bubbles. It's basically like a sine wave. So this sine wave has a period of 4 years. We synchronize the first bubble, and all the others come along just by the fact that they are basically very, very periodic. And then we also added this tendency after the bubble for the price to go and come close to this support line. So basically, the bubble, the price go, the blue line goes up during the bubble, then it tries to go down to kind of where the support line is. This is why we call it the full model. Now, the beauty of making a model like this is that it's not like an average or it's a calculation. It's an equation. So if you have an equation that is a function of time, then you can extrapolate it in the future. And so this, what we do here, we make a prediction. There are not many models available over there that actually try to make predictions like this. So we are trying to make a prediction and say, okay, the next stop is supposed to be about 210. How do we decide how to calculate, how do we come up with this number? I wrote an entire article about it. It's in my Medium. People can read it. But basically, the main idea is that if you look at the deviations from the trend of all the previous bubbles, these deviations follow a very precise pattern. And it's in fact an exponential. And once you fit it, you can extrapolate it to the future and say, well, given these 3 data points, it's 3 data points. So that is part of a limitation of this approach, but at least it's better than nothing. So the idea is if the decay continues to work like in the past, then this is where we are thinking the next top is going to be, because it's basically, it turns out to be about 80% deviation from the trend. So you calculate where the next bubble is, because again, they seem to happen at very precise times during the cycle. So for the next cycle should be by kind of November of 2025. So you know where it's going to be. You can calculate what is the power law value of that particular place. You calculate 80% the deviation from the trend, and this is what you get. You get 200,000. And so you can then project, you can write, it's just an equation. We write an entire equation, a simple equation that is the blue line. It's amazing that you can describe something complicated as Bitcoin with a simple equation. It contains all these components. It contains the bubbles, it contains the bottoms, and in fact, you can project it to the future and get where the next bubble is going to be. So this is the nature of this particular indicator. You can use it with bars if you like to see the bars. We already color code this line. This line is supposed to be, but you can play with it. You can click on the bolt, and you can make it basically a moving average, right? So you can decide you want 20 days. You see, it's going to change, right? Or maybe even 100 days. So if you want to make it smoother. So it's basically like a moving average. You can have the bars, or you can use a line if you want to use a line for the price, right? So you can maybe make it a little bit simpler to look at. You can use a line for the price, and then you can lay on top of that this moving average that you have control, because you can decide if you want to have 10, 100, whatever, if this 10 is going to be closer to the price. And then it's color coded in terms of where it is relatively to the power law. It's going to be green if you have large negative deviation, so you're close to the bottom. It's going to be red if you have large deviation. So it's going to help you to know where you are relatively to the power law, right? Are you closer to the bottoms? Are you closer to the top? And so on. You can always look at where we are relatively to this blue line, that is kind of a support line. So for example, right now, we are supposed to be at about 40,000. So you know that it's very difficult for the price to go below that. But very likely we are not going below that. So it's helping you to know at any particular time to what could be the worst case scenario. So it's very, very useful. Now, by itself, this indicator, given the full model, could be used to identify the tops, because you could say if it crosses the blue line and then crosses again, probably that is a top. Now, the last time we had a second top, the early top, and then a second one that happened where it was supposed to happen. Now, I don't like too much to come up with explanations, that are not internal to the logic of Bitcoin itself, because one can make up an explanation anytime, But if one wanted to do that, one could say that very logically, it's possible that there was a lot of liquidity available because of the COVID, right? This was COVID. The government gave a lot of checks to people, had a stimulus for companies. People got a lot of money available, and they did all kind of things about shit coins. They did all kind of stuff, but some people did go and buy Bitcoin, and so the price was pushed up. There was an early top, then the price corrected, and then we had a second one. Now, what will you do if it was a situation like that? Well, it's a question of using all the information. In one end, if you look at the timing information, with this second indicator that I'm going to explain in a moment, you will have seen that this bubble was too early. And so you could have taken the decision to wait and say, I'm going to trust the timing. This is a fake bubble. I'm not going to act on it. I'm going to wait for the next one. So that is a logical choice that you could have made. But because it's really, our suggestion is to take in consideration both the timing, but also the deviation. So you could have started to take some profit here. So there was nothing wrong to do that, take some profits here. And again, you will never do it just based on one single point. You probably want to start to DCA out, taking some profit. And again, make a plan. We are trying to come up with an advisory plan, like, okay, we did this calculation. It seems that if you do it starting from here with this amount, that is kind of optimal. But people can do it at any particular point. They can decide, well, when these indicators start to turn red, and every 10 days I'm going to sell such and such percentage. You can do your own plan. We are going to come up with something that we think is optimized, but we're still working on that. But you start to DCA out little by little. You still have some coins, if it went up even more, where you can still take advantage of that. But it's based on both deviations and time. Now the timing comes from this other indicator. So in this indicator, basically what we did here, we are plotting Bitcoin in a circle, right? So basically, it's something that this analyst called the Irrational Root. I think he was the first one coming up with this idea. So I want to give a shout to him. It was a very good idea. It's nothing new, right? Like the power law, it's nothing new. I get credit to have used it the first time on Bitcoin. So this is where my credit comes from. It's as simple as it is until you have somebody doing it. It's not that simple, because otherwise, why other people didn't do it before? So he gets the credit to do it in this way. It's not, like I say, many times people, like scientists, do this representation of having something that has periodicity and putting it in a circle. So it's not a completely original idea. It's just that he had the intuition that it will have been cool to do it with Bitcoin. So we kind of reproduce what he does. The only difference is if you do it in a circle, it can be done with TradingView. Strangely enough, the Luxalgo company helped us to do that, and we have that indicator. It looks like a clock, but it's not very. It's nice to look at, and it helps you a little bit in knowing where you are. But if you want to compare it with the first indicator, it's better to represent it like a sine wave. So you basically project, if you have a clock, and we do represent it like a clock, we have this handle of a clock that tell us basically the time. So we made it in a clock. I know that a lot of young people don't know how to read analog clocks. That is so sad. But imagine that you're dividing the entire circle between 12 o'clock or 0 all the way, you go around the circle, right? So then you have 1/4 of this circle. It is going to be 3 o'clock. Then you're going to have 6 o'clock, and then 9 o'clock. And all this time correspond to different particular events during the cycle. And it's conventional where you want to put 12 and where you want to put 3, but we put it on the top, right? And then if you have a clock hand, then you can project it, right, on the y-axis, and the function that describe how this price will change will be like a sine wave. So it's just that it's a sine wave that becomes bigger and bigger because the length of the end of the clock represents the price. So as Bitcoin goes up in price, it's a funny clock where the end goes bigger and bigger, So it's really interesting. And this is represented. You see how these bumps are in the beginning smaller, and then they became bigger as we go, right? They become bigger and bigger because of this. The amplitude of this sine wave is the price. Now, why a sine wave will have also a negative component, right? So why all these are positive? Because we decided to flip it. It's easier to see like that. So it looks like basically a bunch of bumps. So we call it this the clock, right? We call this indicator is our clock. And so you can see here the color-coded quantity is the price as it oscillates. And the color coding doesn't have to do with deviations like in the first indicator. It has to do with timing. So as we come closer and closer to 12, where we're supposed to see the tops, the color starts to go red. When we come close to the bottom, that is basically have a cusp here. So imagine all these section, basically it's a quarter of this oscillation. It's 1 year. So it takes about 1 year to go down to the bottom from here to here, about 1 year. And then, and it takes also 1 year to go up. So we call 9 o'clock, basically, the time when the bull market start to go really crazy, right? It's going to be the ultimate bull. Is where the bull starts at about 9, time 9. So this nice clock tells you basically the time, right? When to expect the bull to start. So here, when it started in this particular time, you see several things happen. Usually the price crosses the power law. It's not below the power law anymore. It crosses maybe sometime just a little bit later, after 9 o'clock. But you see, basically the price is picking up, and that is very important. Now, there is probably the less significant is this transition from bear to bull. This is how we call it. It's basically 1 year after the peak. After we went down from the peak, we reach the bottom. It takes 1 year. It's basically, not much time later, the halving happens. So it's such a way of saying we are coming close to this time when a lot of things are going to happen. We kind of spent 1 year along the power law path, along the support path. We have another year. Basically, we spent 2 years on the support power law. So we left 1 year behind. We have another year ahead. So it's a way of marking this particular event. So it's not the top. Many people get confused because it's basically the bottom of a sine wave. But because we flip it, it looks like a top. But it's not. The label says clearly it's a transition from bear to bull. And then again, notice what happened here. We have a transition to full bull. That is when things start to get exciting. Things pick up. So it's a good way to know that we are close to the bull run, right? And the beauty of this, see, again, here you can see how consistent it is. Because Bitcoin is like a clock. Okay? Same thing here. This when things started to pick up and became more exciting. It's not exactly the same every single time. But so the beauty of this is that you can project it in the time, in the future, and then we know when the next transition to full bull is going to be, right? Because right now we left some time ago, in January, we left this time when you could say the bear was over. It's almost like springtime in a certain sense, if you want to use season, spring, summer, winter. If this is winter, this is spring, then it's summer. So we're going closer to summer, and summer will start in the end of this year. So maybe it's November, maybe December, but around the end of the year is when the transition to full bull, like we call it, time 9. And now we are 750, something like that. When 9 comes, that is the time, this is when we are expecting the beginning of a bull market, right? So it's pretty cool because you know ahead, of time when to expect things to start to get excited. So probably my prediction right now is that maybe we are going to go down a little bit more. Maybe we are kind of coasting along, but nothing special is going to happen until this bull will start. Now, the reason why we are all the way there is mostly because we got excited because of the ETFs. I can show you other charts that show it was not really funded in terms of the liquidity available because of, we have a very nice liquidity indicator that I want to show you in a moment. Got ahead of ourselves. Notice how cool it is that the price reached the power law and say, I'm not ready to cross it. Now, is this a chance kind of things? Is it real? You judge, you judge. But it's very interesting that, we have support here, that we have resistance here. The price is not ready for crossing. It is happening usually after this event happens, that we cross the power law. So this is our clock. We have another one here that is what we call the Hertz coefficient. The Hertz coefficient is something that you can find as a general trading view indicator, but this one, it's tailored for Bitcoin. It's based on the power law properties of Bitcoin. It's designed to work with Bitcoin specifically. And what it does is basically it looks at the quality of a price behavior in Bitcoin, and it determines three possible paths, three possible regimes. One is mean return. So it means that the price is oscillating. When it deviates too much from the trend, it wants to go back. And that usually happens at the bottoms. When we are below the power law, usually this is how the price behaves. And that happens when this indicator goes from 0 to 1. So when we are below 0.5 and closer we have to 0, more of a mean return type of behavior we observe. And you can see. So it's useful in terms of, again, another way of indicating we are close to the bottom, that the price tends to oscillate. And so it's again, it's convergence of many different information, or many different types of information, and you put together and you create like a picture, like a consistent, coherent picture. And usually what happened during the bulls, we are very much, because it follows this exponential path that I described, the path, it's very consistent, and it tends to be trend following. So if an indicator is about 0.5 up to 1, is trend following. And the color coding reflects it. So closer it is to trend following, rather the indicator becomes, closer it is to follow mean return, green it is. So this is this Hertz coefficient indicator that we have. This one is very cool. It's basically deviations from the trend. And we did it in different way, where if you click on the bolt, there are many different type of way of representing the deviations from the trend. So we use a power law trend, and then you can calculate different quantity. Like, for example, you can calculate price minus trend divide by trend, right? And if you do that, you get this picture. The usefulness of doing it in that way is to show how big these first bubbles were relatively to the trend. They were really huge, big deviations from the trend. See, This is associated with this bubble, and the first one was even larger than the second one, and so on. So you can see how big each bubble was relatively to the previous ones. Okay, so it doesn't help actually much in pinpointing the tops. If you do it in that way, the one that works best among all these different ones, but it's nice to have many different types, different way of representing this deviation. The one that seems most consistent is this one, where, remember I told you that we found there is a very precise decay from the tops. So you can correct for that. You can say, hey, I calculate the deviations, then I correct for this decay. And the beauty of doing that is that now all the different bubbles are normalized, you see? And then you can actually split the difference between the bottom and the top and call it, 0 when we reach the bottom and 100 when we reach the top. And now you have a very nice regular type of indicator. You can see all the bubbles are about 100, and you can put like a little threshold there. And you can pinpoint, like, look at this. The moment that we went above at 100 is when we had the top. The moment when we got above 100 is when we had the top. The moment that went up, this actually indicates the two bubbles, one here, one there, the two tops. So it's a very, very cool indicator. And same thing with the bottoms. Once you go below 10, let's say, it's bottom territory. You're very, very close to the bottoms. So people can play with it, etc. But you can see it's very, very precise. So when that is another thing that people say all the time, that is so stupid, because they didn't spend the time and the energy to actually study these things, understand them. They don't want to learn, so they come up with excuses. I think this is the reason. And one of the things I heard all the time, the power law has too much of a variation between, the support and the top. That is not the power law. That is what Bitcoin does. It has these bubbles. But you can see how you can use the power law to pinpoint where the tops are, where the bottoms are, so don't make up excuses. It's actually the best tool that we have to know exactly where the tops are and the bottoms are. Even if the patterns didn't repeat itself, you know that something is going to happen by the time you reach these levels, where the price is unsustainable and there will be a correction, So it's a very, very powerful tool. I'm going to stop for a second to see if you have any questions, or if you have anything you want to ask about these indicators.
This is really informative, and it really, as a traders and investors perspective, I hold Bitcoin and I do trade when the time is right. I see this playing a crucial role in upcoming strategy that I'm going to build. I see, there are edges, like you said, on the last chart, right? If the value is rising to above 90, right? Then again, it is a time for me to at least be aware or have a stop loss at the point above 90, right?
You can agree with me that knowledge is always better than ignorance, because
exactly
how is going to hurt you to actually know where we are in the cycle, how far we are from the power law, how regular these cycles are, how you can see there is a very precise alignment between the deviations from the power law and where the bubbles have happened, where the peaks have happened. How this is going to hurt you? It's going to help you no matter what you're doing. Even if you simply want to hodl and buy more Bitcoin because you are DCAing, you're buying every month a little bit of Bitcoin.
Exactly.
You're going with red territory, go above 80. Don't buy. Wait save that money, put it aside, buy when we go back to yellow at least, or maybe green. You can do it in a moderate fashion. You don't have to wait until green, because maybe you're hoping that it doesn't follow the power law and it's going to do something else, but do it in a more aware fashion than just doing it by chance. So it's going to help you no matter what. There is nothing
Yes,
to discuss.
and I think it is going to help the hedge fund, since we have ETF now. We are shifting certain amount of Bitcoin holding from Bitcoin maxis to ETF holders, investors, right? And most of them are here to make money, right? They will use whatever model they can find most resembling. And again, they hold like 500,000 Bitcoin. Come on, it's been less than a year, right? And no individual person can beat that thing.
Absolutely.
And now you are in a mercy of those people holding the Bitcoin, right? Be smart and just have a stop loss. If you are afraid of whether the market is going down or not, just again, to a certain amount, whatever you are comfortable with, have a stop loss. If the Bitcoin goes $180,000 and you are buying right now, have a stop loss at $160,000. You are making money no matter what, and just wait until it comes down to $150,000. Right?
Yeah, exactly. And you can do it gradually, right? You can do it in a certain percentage, start to buy less and less. You're coming closer and closer to the top, there are so many ways that you can play this, but the entire point, you can see, I want to show how regular it is, how precise it is. It's almost to the point where it's surgical, and there are no better, but I want people to have as many tools as possible to make informed decisions. So another indicator that I wanted to show you that is really cool is this one. So this is a liquidity indicator that I developed recently. Again, almost everything I do in terms of indicators, I write entire articles, that people can read in our newsletter. So you can go to my Medium. I will give you all my links because I want people to understand how I derive these indicators, with this logic behind. So what I did here, because many people were pointing out, say, look, it seems that there is some kind of link between the price of Bitcoin and global liquidity. And so I wanted to understand what is going on. And I found out there is some relationship, right? So if you do price and you take global liquidity, now the global liquidity, it's a kind of an arbitrary quantity. There is not something that it's called global liquidity that everybody agrees. But one of the things you can do, you can look at many different banks, how much money they are moving around. You can look at M2 for different nations. So basically, I took almost like 14 different type of indicators, the parameters, and I put them all together. If you read in fact, if you go the bolt here, okay. See, this is all the list. So I took the Federal Reserve System, Treasury Reserve Repurchase Agreement, People Bank of China, European Bank, US M2, M2, China, Japan, other countries. All these things that indicate how much money is moving around. And instead of plotting it directly, what I did, I look at the relationship between this quantity and the price of Bitcoin. And it's not a simple relationship. I was hoping, okay, maybe it's a power law. There is a very nice, beautiful power law. It's not. It's much more complicated than a power law. It's some complicated model. Now, when you have something complicated, there is a clear relationship, but it's much more complicated than some simple formula. There are many different approaches, but one is called the Taylor expansion. Basically, it turns out you can approximate anything if you start to add more and more term to this expansion, right? You start with a straight line, Then you say, okay, I'm going to add a square component, I'm going to add a cube component, x to a 4 component. And every component will have its own little constant that is expressing the relationship between what you're trying to model and, and the quantity, the real quantity. Now, the problem is, in theory, you can model anything, even all the different bumps and tops of a price, but you will have to add more and more of these terms. That basically, at a certain point, is like you are modeling noise, you're not modeling signal. So you find a compromise. You decide, okay, I'm going to add up to maybe the fourth term, whatever, the fourth power. And it's a very limited model because you don't know where you are overfitting and where it's a true model of a price. But right now, it's the best thing we can do. We can monitor it and we can update it as we get more information. But the idea is that the purple line is supposed to represent what the fair price of Bitcoin is given the existing liquidity. So this is what the purple line is. So that is much more useful than plotting the liquidity by itself, because you don't know how it relates to the price. So this is an attempt of saying, given the complicated relationship we see between Bitcoin and the power law, or the price of Bitcoin, then the purple line, it's a rough estimate of what we think the fair value of Bitcoin should be given the existing liquidity. So, for example, right now, it's telling us the price is about 42,000. So we are very above that, right? And what I do anytime the price of the white line is the real price, every time the real price is above the purple line, I shade the area in red, and vice versa. And notice that we see very precise patterns, okay, over the history of Bitcoin. It looks like that every time we're ready for a bull market, the purple line is above the white line. So we basically have this green area, right? It makes sense because you cannot really start a bull market unless you have enough liquidity around. And so this is indicated. And last cycle, this is what happened. We reached the bottom. We started to have enough liquidity. When we got a little bit too excited, I don't know, we can look up what happened at that time. The red line here is the normal power law. We went above the power law. We should not have been above the power law given the timing. And notice what happened. We actually had a correction. We had a correction. The correction went all the way. In fact, we had a huge big correction when we had COVID. This was COVID. And then that correction in price actually brought in the liquidity we needed. So we went from this red area to a green area. The bull market started because we reacted to that by the price bounce back. Then a little bit later, when stayed flat, then a little bit later we actually had a proper bull market. Notice what happened when we are very close to the top. We have a switch. We start to have not enough liquidity. That is basically the definition of a bubble because the underlying fundamentals are not there to support the price. This when you have pure FOMO, when everybody gets crazy, they are driven by basically irrationality, they push the price higher, up to a point where basically it's unsustainable and the price crashes. So it's very cool. You can start to see these patterns. So it's not really true. I would not say that the liquidity drives the price, but it looks like it's some kind of a prerequisite. It's some kind of requisite to have enough liquidity to support the bull market. So basically, when you start to see this green area appearing, you know that we are ready for the bull market. When you see this red area appearing, you know that probably we went too far. But it's not really pinpointing the top like the other indicators do, but it's telling you it's basically like an alarm. It's an alarm system. It's telling you, hey, we are coming close to very unsustainable price, And also this gives us logical and theoretical motivation of why it's a good idea to sell, because this is telling you there is not enough liquidity there to support these crazy prices. It's not sustainable. So it's another way of seeing why it's probably a good idea to start to take some profit when we arrive to these red areas. And you can see again what happened over and over. This is the same pattern. When the price goes down, the market overreacts. So actually, probably the fair value is the purple line, but it looks like during the bear market, the price, the market overreacts and it tends to suppress the price even more. So it's actually less than what the fair value should be. And then, this continues. In the previous markets, and you see what happened, right? So we have it here. There was this time where we were overvalued. Same thing here, you see. The same type of pattern. We go down. The price is actually, the purple line is below, and then there is a switch, right? When we have a bull market, when the bull market starts, we have these green areas that are kind of a precursor for the bull market. And it's the same thing here. So every time there is a bull market, it looks like we need the liquidity to support the bull market. It happens every single time. Where are we right now in terms of this relationship between global liquidity and and the price? It looks like we don't have enough liquidity, right? Probably because, again, we got too excited because of ETF. The price was pushed up. The ETF do not represent anything extraordinary. I've made this argument so many times. It's exactly what we need at this particular stage of evolution of Bitcoin to support the price, and it continued on the power law. We need this exact type of event where there are large institution coming in and buying Bitcoin in large numbers to support the continual growth of Bitcoin along the power law. But people didn't realize that. They push the price too high. Once we went there around the power law, the price kind of stopped. It was like a resistance. And now we don't have enough liquidity. But notice what happened recently. It looks like liquidity is going up. Price is correcting. So I imagine these two lines are going to cross. And hopefully maybe they are going to cross around November, when I'm expecting the bull market to start. But I think given the previous patterns, we should see these turning green before the bull market starts. So this is another very nice indicator that adds to the picture. Yeah.
For the November, we have a catalyst too. We have election coming up, and it is going to be a pretty good catalyst, especially for the crypto market.
I think it's going to be one more thing added to the entire picture. I want to believe. I didn't do that too much. I can go back, because anytime I do make claims, instead of other people where they just move their hands, they hand waving, and they're expressing their opinion. I never like to express my opinion. I like to back with data my claims. Sorry for that. So I'm going to study the election thing. We didn't have many elections, right? Because they're happening every 4 years. But I'm going to see if there is any evidence that election play a role. Probably psychologically they do a little bit, but it can go both directions. So I rather want to think, but until I have data, I don't want to go one direction or the other. I want to believe that Bitcoin doesn't care about things like that, like politics. It doesn't matter, if we have one president or the other. It could matter, in terms of policies and things like that. Maybe momentarily the market will respond to that, but in general, it should not matter. That is my right now hypothesis, because I want to see, given the data that we have, if that is the case. Unfortunately, we don't have a lot of data because we had only a few elections, given they're happening every 4 years. But we can check. But in general, yeah, it's interesting that it coincides with the elections, this supposed critical time. But it's also linked to these liquidity cycles. I do want to study a little bit more of the liquidity cycle, looking at their periodicity, see how. I show you a little bit here, but I want to go deeper and understand how they play with each other, the internal cycles, because Bitcoin is not that the 4 years. The 4 years are internal to Bitcoin. They have nothing to do with liquidity cycles, but also because the liquidity cycles are more like 5 years. But, because we are it's almost like having two clocks that have slightly different periods, and they play with each other, they interact with each other. And this is an entire field that we study in physics, of how different time processes relate to each other, and something that I want to study better. But right now, it looks like, the simplest picture that we can get is that we do need to have liquidity for the bull market to start. It happened over and over again in the previous cycles. And then when we're in bubble territory, what happens is the other way around, where we can almost identify this bubble territory by not having enough liquidity. But it really makes sense. I like this indicator because it seems to make sense. It seems to give us a coherent picture. So this is one more tool. Now we have one more indicator that I wanted to show you. Let me see if I can find it. I have different ones. Just give me a second. So this one. This one is the volatility indicator. So here you have a normal price. I can put, if you like, bars. And then I calculate what is the returns. So returns here are defined as the ratio between the price today over the price yesterday, right? So if you have 1, it means you're not making, you're not going up. If you are below 1, you're losing money. If you're above 1, so 1, for example, if I have 1.02%, it means you made 2% that day. 1.04%, 4%. And, if you have 0.98%, you lost 2%. Okay, so the blue line, what the blue line represents, is what the power law says. Because one of the things that people don't realize that the decay of the returns over time, it's a very precise mathematical formula, and it's actually what creates the power law. Because the power law, if we add gains, right? So if we had let's say we had a 1.01%, right? And Bitcoin went up in average 1% per day. It will be crazy because you will make a lot of money very, very quickly, right? But if you had some kind of return, and that return was consistent over time, the growth will be exponential. This is what exponential growth means. That you have consistent returns, even in average, and they are compounded, and then you will see an exponential. We have a power law because we have these returns, but they decrease over time. And it's a mystery why they decrease in a very, very precise fashion, mathematical fashion. You can write an equation. And that equation is the blue line. And you can show you over time you can go back all the time you want. In average, the returns. So you're seeing the gray one are the daily returns. The white one, I don't know if the 30. So right now we are averaging over 30 days. So the the white line you're seeing are the returns average over a month. And you can see, if you can go back in time, that it doesn't matter how back you go, the white line oscillates around the blue line. So the blue line is the theoretical gains. Right now, for example, if you follow the equation, because of a power law, we should make about 0.1% per day, is what the power law says. And these gains, these returns, go down in time, relatively slowly, but this is what they do. And so it's a reference that you have, to see where we are relatively to what the power law predicts. Now, during the bubbles, when we have the bubbles, notice what happened, right? We have a bubble here, right? Notice what happened. The average returns go up very much, like to very high value. Like, for example, and of course, they are not consistent, right? But in general, they are, over, like, if you're thinking the bubble started here, went there, during this period, we went up at about something like 0.46% per day. And then when we go back, it's the same thing. But in this case, we are actually losing when we're going down. And I showed recently, I made some studies that the going down is much more regular than going up. It's still an exponential. You can see how it goes up like that. It's kind of an exponential, but much more regular when we go down. And every single bubble, we went up faster. If you go back in time, we go faster. It was about 1.06% the first bubble. It was 1.1 the second bubble. It was 0.46 the third bubble. When we go down, we always go down at about 0.24% loss per day. It's very, very interesting. Even this is very regular. So this indicator shows this. So I'm going to add some lines here. This is what I will do next, because I'm always improving these indicators anyway. I make updates on a regular basis. But the red one gives us like one standard deviation. So if it's a kind of useful, because if a daily return goes above that, and you want to play with a small quantity of your Bitcoins, and you want to do some trading on a faster scale, than over the cycles, like we do with all the other indicators, this could be a good place, right? Every time you go above the red line, it's probably a good place where maybe put a stop loss, or maybe if you want to sell some Bitcoin with the idea that it's going down. So basically, that will be when we cross this green line. There is a dip. Or you can use it again if you don't want to trade per se. Maybe you can use going down. The green line represents like very large deviations from the trend, from the return trend. It's a good place for a dip. So maybe you want to buy more during this time. You can wait if you do DCA, and then wait for one of these dips and buy. So this is a good indicator for that. But in general, I'm going to put lines here representing all the different bubbles, right? So I told you 1.16, 1.11, 0.46. And also what I'm expecting. I'm expecting the next bubble, we should have returns, average return will go about 1.01, 0.33. So I'm going to draw a line here representing what I'm expecting for the next bubble, and then maybe what if we go 500,000? So that if you go to 500,000, the returns on a daily basis need to be about 0.66. That is, I think, it's sustainable right now. We don't have that kind of momentum in Bitcoin to get to 500,000. But I'm going to put it like as a kind of a threshold, so people can see. You can monitor on a daily basis and see where we are with our returns. See, right now the returns are negative because we're actually going slowly down. But we will have to be somewhere here, where 0.033 is, or if we have even higher than that, that means we are on the path to 500,000. So you actually can monitor on a daily basis and see where we are in terms of the returns to actually justify seeing a peak at 200 or maybe 500 or whatever. So it's a very cool indicator that has a lot of information. So these kind of all the indicators that we have a couple of more, but they are more of the same idea relatively to the others, just a slightly different angle.
We'll reach out to you regarding the name of these indicators, so that the audience who wants to use this.
So the best way to learn about, let me show you. I'm going to share. This web. So this is the page. And this page. So do you see the URL?
I don't see the URL. I only see the page. But I will reach out to you. You send me.
I will give you.
People will find a way to put other people down. There is no word for that. But again, thank you very much for giving your time and explaining one more time how to use the power law and to anticipate the coming days and how we can make a smart decision just by using this edge. Thank you so much, Giovanni.
My pleasure.